Okay, welcome one and all to The Long Game Asia, our podcast where my partner and I, Nino Gorla, talk all things private equity in Asia. Nino, how you doing today?
Hey, Carlos, doing good, doing better than average, because we're joined today by a very special guest. Carlos, maybe you can do the honors and introduce who we're joined by.
Indeed. So, Jun, I'm going to let you introduce yourself, but basically, by way of context, Jun and I worked very closely together back in my TPG days, where I spent, more than half of my time in Japan, through three major portfolio companies and countless other deals. And we worked as close as can be, and it was a joy every day working together with you, Jun. So, maybe Jun, if you can tell your story a bit, go back as far as you want, and then also tell us about NSSK.
Great. Well, first of all, thank you, Carlos and Nino, for inviting me to the long game. I'm a big fan, so it truly is a privilege to be part of your journey. And just a quick background on myself. And I'm not going to spend too much time dwelling on it, but I think the best way to understand where I'm coming from is essentially I've spent half my career based out of North America, doing deals around the world. And then I spent the remaining half focused solely on Japan. And essentially what I've done is I've taken US-based investment technology, operating improvement, playbooks, exit methodologies, among others, and understanding how to transform businesses in various cultures and applying that to the Japanese context. So it's taking the best of both worlds and being super local, but being global, at the same time. And that's the story of my life, and really the story of NSSK as we have embarked on our journey, starting 12 years ago.
And the TPG chapter began. I think we in the same year. It was like 06, something like that.
20 years ago, Carlos. Yeah. So
yes, indeed.
It's quite a while. Yeah.
And it was like 10 years. And then NSSK has been 10 years now.
Yeah. So we're now going on to our 12th year. And wow. So, during that period, we've had the good and, misfortune, one could say of walking into, the GFC. We've had, some natural disasters along the way. As well as a coronavirus, but but interestingly enough, despite all of the uncertainty that continues to surround us, I think we've all been fortunate, right, in our own respective lives and careers, and I certainly would say that NSSK has really benefited from Japan's resilience as a country, as an economy, as a society, and I walk around waving the flag that, we are in the golden age of private equity for Japan, right? And it's much like, the United States circa late 80s, early 90s, Europe in the late 90s, where, there's going to be a nice 20, 30, 40-year run, for private equity in Japan. Long time coming, but, it'll be a long and potentially very, prosperous, run that has just started, and this is not something that's cyclically driven, but this is structurally driven.
So we'll definitely get into that as a big part of the conversation, and also having you juxtapose the global experience you had and applying that in the Japan context, and get some of that contrast out. So just maybe talking about the overall asset category and the story in Japan. They have, there's this saying, and I think it may be my saying, I'm not sure if I heard it from somebody, but that nothing changes in Japan until suddenly everything changes. And I've seen that in so many ways. I sometimes liken Japan to like a school of fish, the way the markets sometimes work. But looking back over these 20 years, what were the big tipping points that transformed, PE from being, something that's just, on the margins to being really not mainstream?
Yeah. If you recall, Carlos, when we started our, attempt to build out a private equity franchise on behalf of TPG 20 years ago, we were called vultures, right? there were movies and drama series depicting private equity investors as truly, vultures. That word was used, hagetaka. And we were not trusted. We were viewed as asset strippers. And that has changed, I always refer to it as, kind of ultimately, what's the biggest test of change is if you can solve the mother or mother-in-law problem, right? Where, 20 years ago, you brought home a potential husband who was operating private equity, that person was kicked out the door immediately. But today, that mother or mother-in-law is much more welcoming of a private equity career, because I think we've been able to, through hard work, right? And a lot of the pioneering work that, we did, and I know that Nino has done in his own, areas, really, created the concept that there are many types of investors out there, and some of them are actually business builders. And if you're a business builder in Japan, you're always welcome. So that's been, a very big transformation. And the other part of it is also the macros. We've had, frankly, 20 years. Everybody says it's, 3 lost decades. It's actually 2 lost decades, from the 1990s to 2010 period where we were operating. Where GDP really, was flat. We really didn't go anywhere. Well, we didn't have inflation. So, it wasn't hurting us as much. But if you look at all of the data, the macro data from 2012 on to, 2024, 25, you'll see that Japan has grown, slowly but steadily, from about 500 trillion yen in 2012 to about 660 trillion yen last year, right? That's, 150 trillion yen increase. And in dollar terms, using today's currency, about $1 trillion, right? From point to point. And people talk about the economic miracle that Singapore is. Well, that's 2 Singapores. So, think of it that way. We created 2 Singapores over a span of 12, 13 years. If that's not growth, I don't know what is, right? And look at our stock market, right? If we had all invested in Japanese public equity at that time, you've seen that the Nikkei has gone up by almost 7-fold over the same 12, 13 year horizon. How many stock markets have done that, right? So, so there's a lot of things that are behind that. And, it started with Abenomics, right? The late Prime Minister Abe, right, implemented a number of different policies that, initially referred to as the 3 arrows. And that led to, among other things, more investment into our economy, a more, available money supply to get deals done. The concept of corporate governance and corporate stewardship, were introduced, accountability, so on and so forth. And a lot of it, was words, but those words slowly started, having meaning, and through implementation, and through, some form of policing, that, the market slowly embraced, all of these stated changes, and voila, you've had, a nice macro recipe, or backdrop, for success. That's one part of it, right? And then the other part of it was, we never saw this back when we were doing business, the real advent of business succession deals. So family businesses or publicly traded companies with family influence or ownership being sold. So what was so different between now and 20 years ago? Well, 20 years. So what happened in 20 years is that all of these decision makers or founders or, second generation owners aged by 20 years. And so the average age is now in the 60s. And the 2 things in life that are certain, right, are death and taxes, right? So you have death, you're now knocking on the door of death, although, we all here in Asia live to our 100, right? But you've worked a good life, and a good part of your life. And you're thinking about, what are you going to do for the rest, for the rest of your years, healthy years. And then the other thing that's certain in life is taxes. And inheritance tax in Japan is 55%. So, death and taxes or, demographics and taxes have driven a dramatic increase in sales of businesses. And so, it's structural, right? And it's not something anytime soon. And by the way, they're not 10 companies like that. They're not 100. They're not 1,000. They're not 2,000. There's 2 million of companies.
I wanted to mention this. it's a number like that big. And I mean, even above, say, enterprise value of, I don't know, 75 million USD, how many companies would be, ripe for succession?
Yeah, I mean, our target range is basically, kind of a valuation in excess of 50 million, because we look at the 50 million to $200 million category as add-on acquisitions. So we use them as plug and play, tools for growth, inorganic growth. And that is the largest part of the market, right? That, sub 200 million category. And, last year, there were about 5,000 M&A transactions. And, 4,500 of them were in that category. So the largest bulk of deals are these, succession issue driven, tax driven, transactions where families are selling, what in many cases are pretty darn good businesses, but for various factors.
Yeah, the family succession dynamic is certainly a key feature, I guess, of the opportunity in Japan. But I guess, beyond sort of the macro sort of structural factors that you outline, I think one of the things that I came away from my experiences in Japan over really just a couple of years, not decades, but enough to get a flavor, I guess, was that, certainly for these founding families, things like legacy and reputation and stewardship of the asset were really important considerations. And so you said something interesting that maybe 20 years ago, those families might have been describing PE owners as vultures. How do you think those same families might talk about responsible PE owners today? And what is the role, I guess, that PE can play in solving these succession problems for these families?
Yeah, no, I mean, you've hit on, a lot of the important points, right? Because maximizing sales proceeds, that's an important factor, but that's not the only criteria for selecting a partner to sell to, or a party to sell to. And as you mentioned, protecting their legacy, protecting, the family that might continue to be management members in that organization. It's protecting their employees, the various relationships that they've developed with customers and suppliers. It's protecting their brand, maybe, right? And so for a lot of different reasons, a private equity is a solution, right? And not a problem. And in fact, many companies or family businesses view a transaction with a private equity firm as the best possible solution, because you can solve all of those different issues. You end up selling to a strategic. A lot of things go by the wayside, right? Headquarters disappears. The brand might even change. All family members are asked to leave. All of a sudden, there's somebody shipped into the company to run the business that has never, seen the business before. And so in many ways, we are the friendlier, more flexible, and potentially, more trusted, partner for the organization as it goes forward. So it's changed night and day in that regard. So that's a big part of what we do. And what's also interesting is that, those are family businesses, which represents, probably 65% of all private equity deals in Japan. But the remaining 35% are public to privates, right? They're carve-outs. They might be special situations. They might be, secondary sales from other private equity firms. But, even in the public to private space, which is, again, a new structure-driven category, again, from the corporate reforms that were enacted, almost 12 years ago now. But you're seeing more going privates than there are IPOs. And we think that, the number of public companies in Japan are going to be halved over the next 5 to 10 years. So we're going to go from 3,900 companies to probably 2,000. And you say, well, boy, I mean, that sounds insane. But when you look at, what happened in the US, what happened in Germany, what happened in the UK, the same thing has happened. And that's all driven by market efficiencies, right? So we are at the beginning of, again, 5 years ago, if the three of us sat down and said, let's target opportunities out there, public to privates would have been the lowest priority, because that would have never happened. But in the past 3 years, the music has changed, and the rhetoric has changed. And, corporate boardrooms that we shared, right, Carlos, the concept of shareholder value maximization was never there, right? What's core, non-core? I mean, we had to force those discussions, but today those type of discussions are becoming more ordinary course. Again, thanks to the corporate reforms, but also all of the players in the marketplace, like activists, right, who make known their points of view and make sure that the management teams are engaging in dialogue, addressing those perspectives. And management is beginning to understand, fiduciary duty more and more.
That's actually
in private and public context.
That's a nice transition to, the next thing we wanted to cover, now bringing very much to the micro and thinking about your firm. And you really have had this kind of two very distinct chapters between, TPG and NSSK, and of course your prior experience. And so, when you think about, this business you built, which is quite unique, and I want you to, to tell us all about it. What do you think, NSSK or more broadly, this country specific, local GPs offer that a global would not necessarily in the Japan context? And by the way, Gene, if you can, let me just ask if you can also address this ESG theme, right? Because I go to your LP meetings and I see you, talking about ESG all the time. It's become a real talking point in Japan in a way that I don't remember in my TBG days. So talk about how that's really a strong calling card for you.
Yeah, I think when we were at TPG, and I know that many of my, dearest friends who work at other large private equity firms, global or Pan-Asian, right? I mean, the whole idea is, okay, how do we deploy more capital, right? How do we get, capital, allocated to Japan? And that's kind of the key question. And for us, the question is not how do we deploy capital? It's, how do we earn the trust and become, the respected and trusted partner, for Japanese management and owners, right? We're asking fundamentally different questions. And, much like the title of your podcast, we're playing the long game, right? We're not short-term greedy. We're long-term greedy, right? And to do that, trust isn't, you can't acquire trust overnight. And certainly having a lot of capital, gets you sometimes a seat at the table, right? Sometimes gets you a meeting, but trust, gets you the ability to get the transaction done, right? So we've completed more deals in Japan over the past 5 years than, anybody, in our marketplace, right? People do 1-2 deals a year. We do 5 to 6 platform deals a year. It might do 3 or 4 add-on acquisitions as well. So, we're head and shoulders, ahead of, our peers, both global and local, in that regard. And so how have we done that? Well, we've done that by creating what we feel is a very unique sourcing system. And our sourcing engine, is very much tied to, the overall Japanese economy, not Tokyo centric, but being able to mine opportunities in all parts of Japan. How do you do that? That sounds like a great statement, but how do you actually do that? Well, we're divided into 47 prefectures, right? So if the United States has 50 states, we have 47 state equivalents. Each prefecture has a local government, has a major bank, right? And we're all familiar with Mizuho, Mitsubishi, SMBC. But you go to Kyoto, the main bank is Kyoto Bank. You go, 30 minutes on a train to Yokohama, the main bank is Yokohama Bank. You go to Hiroshima, it's Hiroshima Bank. They are the primary lenders and the capital solutions provider for their regional economies. So if you want to penetrate, Japan, to its fullest extent, you need to develop alliances there. So we've done that, and I'm happy to go into how we did that. But again, we created structural advantages, by doing that. So today, there are about 90 regional banks. 50 of them have invested in one or more of our funds, right? That was unheard of. They don't even have alternative programs, right? So these are, CEO boardroom decisions where they say, we want to enter into a strategic alliance with a private equity firm that is local, that has operating capability, and that is committed to maximizing and optimizing, regional economic vitalization, right? And that's been our positioning. So we have that. And what that does is it gives us not only exceptional financing, right? So on a risk-adjusted basis, we would argue that our returns are much better than anywhere in the world, because where else but Japan and through regional banks can you finance a leveraged buyout that might be 70% debt to cap and get covenant light, right? And our definition of covenant light is we do not have quarterly maintenance covenants. Where do you see that in LBO land? Well, you don't, but you see that in NSSK deals, 90% of our financings. So this is a true competitive advantage with respect to capital structure management, risk management. But it also has given us tremendous amount of dividends through, again, the original topic, which is sourcing, because they're the trusted financial institutions in these local markets spread across 47 prefectures. They're close to the owners, the founders, the public companies in those regions. And so if you're, the trusted private equity solution for the main bank in those markets, you tend to get first call. So that's number one, right? So having that first call access using the regional strategy, and you'd think other Japanese private equity firms would follow that model. It's very hard to replicate, and for a number of different reasons, but because relationships take time, and we created regional impact funds along our journey. We have 5 of them, and that's been, kind of the major impetus there. The second thing is, which you had asked about, Carlos, is, our commitment to ESG. And we've coined this term called alpha generating ESG, where any policy procedure or a methodology associated with improving the environment, affecting social outcomes, and increasing clarity and fairness around governance must have some form of economic impact or return impact. And so that's why we refer to as alpha generating ESG. It took us, I'd say 8 years to perfect this, but we now believe that alpha generating ESG that's embedded into our NSSK Value Program Toolkit works very, very well. So, I'll just give you some numbers. Over the past, since inception, we've exited, let's call it 15 companies. And the average return on these companies across different vintages is 3.7x MOIC. That's gross. And it's 46% IRRs. And usually when you have that type of multiple of invested capital, right, the IRRs are lower because it presupposes a longer holding period, but you do the math and you'll discover that it's 39 months. So what we've been able to do is to effectuate operational change a lot quicker over time, right? So our NVP toolkit is working, more effectively as knowledge accumulates. And because we focus on 6 sectoral themes, the knowledge base, it compounds, and enables us to get our productivity measures done quicker. And when you look at it as a percentage, right? So you say, well, how much of it is momentum returns, right? And, if you look at our return waterfalls on those same numbers, 85% of our returns are coming from how we impact ops. And if you go through our operating playbook, you'll have fond memories because you were one of the architects, right, at TPG of creating our playbook there. And we turbocharged, the NSSK playbook by going back to basics, right? And really, starting with mapping and remapping of business processes, right? And laying out fundamental, KPIs, that we're going to track on a weekly, monthly, semi-annual basis, annual basis, et cetera, having compensation tied to that, right? Providing and overlaying tools to make things more productive, digitizing what has historically been analog processes, so on and so forth. But a very mechanical, systematic, and repeatable process. And so if you look very carefully at our marketing material, you'll notice that NVP has a little R next to it. I think we're the only firm in the world that has actually trademarked a BCP program. And the Japanese Trademark Office gave that to us after 8 years of basically proving proof of concept, right? And so this has become a very big marketing for us. And it's founded on our values around philosophy, right? So within our NVP toolkit, we have something called the NSSK Philosophy Program. And that's where the ESG policies and procedures are embedded. But it boils down to one statement, which is, our basis of making any decisions at an operating level or investment level is one statement, which is, we'll make judgments based on, what's right as a human being. So we'll do the right thing as, humans, beings are citizens of the world. And that is our fundamental standard for, making decisions. It's not about short-term returns. It's not about maximizing IRR, increasing MOIC, increasing revenues or earnings or cash flow. It's about doing the right thing.
So this is do no evil in a Japanese context, like Google, right? But in fact, this ESG, as I recall, you've been kind of carrying this brand or this concept in your own role. I mean, there was an ESG. You're chairing the ESG committee, or you're really owning this personally. Is that right?
Yeah, I think with ESG there was a lot of confusion, there was a lot of mismanagement, misdirection. And failed implementation. And today you have, ESG backlash, right? Well, I'm a proud wearer of this badge. This badge, if you look very carefully, this is, the badge that, was created by the operating principles for impact management that the IFC, established in terms of guidelines around how you measure, monitor, and create impact in our world. And we are the Asia Pacific chair. And the reason we are the Asia Pacific chair is because we were recognized, for the alpha generating ESG concepts that we not only created, but that we've implemented and shown, over time, a lot of correlation. And so one of the things that we're, big on is empowering women, right? So, people are surprised, they go, how many employees do you have in your portfolio companies? Right now we have about 27,000, right? So it's quite a big group, of people that work under the NSSK umbrella. What percentage of those employees are women, right? And, most people think probably 35%, right? If the population's 50, actually 74%. And they go, well, what percentage of them actually have managerial positions, right? 5-6%. And, you look up the best performing public companies in Japan, it's around 11. We're at 30%. And then the biggest question is, okay, but you have no CEOs or COs running these businesses. Yeah, because, the best performing public companies is 0.8%, right? And if you look at all private companies, according to the Ministry of Labor, it's around 8, which is surprisingly high. But we're at 20%.
Well, those are remarkable numbers.
Thank you.
I go back to something that you said kind of at the beginning of the CSG topic, which was, this has really stayed with me, this alpha generating ESG. Can you talk a little bit about, for instance, how gender representation in your philosophy and in your practical experience actually drives alpha?
Yeah, well, one of the, big drivers of fundamental growth in a business, right, is you need people, right? And you need talented people, and you need to retain talented people. And the people who are the quickest to leave are talented women, right? If they smell something bad in the company, right, management is not treating people fairly. There's not a glass ceiling, but a brick ceiling, right? They're not going to stay. They can get a job anywhere. They're going to leave right away. So how do you retain women? If you can come up with human resource policies, career development plans, training programs, reskilling businesses, reskilling approaches, re-engagement after someone takes a maternity leave, all sorts of HR policies that keep women at your company and make them happy to come to work every day. Where if you have happy women, you're going to have happy men, right? I mean, in my life, happy wife, happy life, right? But in the context of a company, we truly believe that if the women are proud to be a part of your company, you're going to have, the men are going to be even more proud, right? So that's one part of it. The other part of it is that, we track the data. And, what's interesting is that, we're not perfect. So, I mentioned some pretty lofty numbers, right? Where 30% of our companies, and the track record that, the 3.7x, 46% IR exited companies, right? So realize, our one of our weakest performers from a women enhancement or empowerment perspective, we had 0 managers who were women. And in that case, we looked at the EBITDA growth, they were the lowest, right? So, one company doesn't represent, a database, but, when you do correlation analysis and regression analysis, we're finding that there is a direct correlation between, empowering women, and business performance, which then translates into financial outcome performance.
Yeah. And maybe more sort of helicoptering just a little bit above this, kind of the broader theme of value creation. I'm just fascinated by, first of all, your commitment, to really institutionalizing a playbook. I'm curious, earlier on you mentioned these different themes that are key aspects of the Japan opportunity, whether it's family succession type situations or carve outs or whatever. How important do you feel it is to kind of have tailored a locally relevant playbook, obviously based on global best practice, but that's like specific to either the theme, or I think you mentioned sector? How closely do you align the value creation playbook with the types of situations that you're investing in?
Yeah. What you find is, our value creation approach, which is a little bit different from, the original, work that we did at TPG, and working very closely with, some of the best consulting minds in the industry and operating executives, is that we're very much focused on business processes. So we now do inordinate amount of business process mapping, right? We'll take take a stopwatch to the field and just clock, how people are spending time, right? How customers are spending their time, right? And observing how different processes, are conducted. And that's, at the retail or, customer level. And then you look at internally how decisions are made, right? If it's a new product introduction, how long does it take to get a new product out, to customers? How many decision layers are there? How many meetings actually took place before that got done? And really trying to find a way to slim that down. So, our competitive advantage, and now with AI, right, is that, you have more perfect information before your, eyes, and, in your hands sooner than before. And so it's imperative that, you make decisions quickly with conviction. And the data is there to make have conviction. So it's really, eliminating a lot of unnecessary layers. But those are the types of things that we do. So in that instance, it's less about the industry, right? So it's really, it doesn't matter what industry it is, because, we're essentially taking a variety of different processes and making them more productive. We're taking analog processes and making them digital, right? And that speeds up, all activities that are done, and improves productivity. And in cases where you can then shift human resources to another area because, you've saved, time and resource, as a result of, these enhancements. So that's, kind of that area. But of course, the reason we focus on the 6 themes is that you become pretty good at it over time, right? The first time you're an amateur, the second time, you pretend to be an expert. And by the third time, you've seen, you've been fooled enough times that, where all the problems are and where the opportunities are. If you're an investor, where the add-on acquisition opportunities might be, how they're priced, how sellers think about, these add-ons, and negotiating these smaller deals is very different from negotiating larger platform deals. You need a lower cost infrastructure to do that as well. And at the end of the day, 1 + 1 = 2 doesn't do it. 1 + 1 must equal more than 2. So you need to extract synergies, from the PMI process. But that's easy to say, hard to do. You need an organization to do that, right? So, so if you're operating in the same industries over and over again, that becomes easier. So that's where the knowledge bank or the knowledge universe, has a very strong compounding, effect. And, we're taking advantage of that. And when you look at how to finance deals, we have 90 bank relationships, we know which banks like which credits. We know which banks like which industries. We know what type of situations, our banking relationships don't like, right? And so, you solve a lot of unknowns, because you're dealing with the known. And then last but not least, you have relationships with government and regulatory authorities. And so, you take that risk factor off the table. And last but not least, you know who the buyers are, because you're spending time in the industry getting to know leaders, in that category. And so, you basically know who's going to buy your business, or at least you'll know, with some probability, which companies are best positioned to buy your business, not because you asked AI or you did, desktop work, but because you've actually had dinner with them and they told you they want to buy the business.
So, thanks, Jun. We have not talked that much about industry sector. You mentioned these 6, targeted areas. If you think about kind of the idea, well, both from an NSSK standpoint, the filters you apply in looking at, deal size and sector and various themes, from your perspective, and maybe you could abstract that to the new and emerging, private equity opportunity in Japan overall. What sectors do you think are really the most ripe, and what are like off limits? Maybe you could talk a little bit about the filters you use, because you're really covering a pretty wide swath of the.
I've got to say this. I mean, I don't. As CIO now, I'm going to putting on my CIO hat. We don't really look at what's hot, what's off limits. The way we undertook our portfolio construction strategy really started out of necessity, right? Because 12 years ago, we were the new kid on the block. And so, what does a new kid need to do? Well, they need to do something different, right? If I'm going to be just a new kid doing the same thing that, the large cap guys, the pan regional guys, and the existing Japan players offer, well, why do they need another, GP to put money into? So our goal was really, how do we create a portfolio, right, where we can generate alpha for you that is less correlated with where your largest exposures are, right? So if you're a global LP or regional LP or even a Japanese LP, where do you have most of your eggs? In the US, right? So you allocate, 60, 70% in the US. You might do 20, 30 in Europe, and then you do the rest in rest of the world, right? Which is Asia. And in most cases, China, right? Historically.
Yeah.
So how do we create returns that are less correlated with what's happening in the US, Europe, and China? Wow, that must be impossible. Well, in Japan, it's actually possible, right? So you can do a lot of statistical and regression analysis around correlation, and you'll discover, and it's no secret, but you look at domestic businesses, right, that are sizable, like healthcare, like real estate and finance, like content businesses, right, which are very local and domestic. And so those three, industry categories we discovered have less correlation with, it doesn't matter who the president of the United States is, right? Healthcare consumption is going to continue. It doesn't matter whether, there's a war in the Middle East or in Ukraine, right? Japanese content and manga, will continue to be created and acquired, right? And paid for. And true for real estate and finance, right? Financial services. Most of it, which tends to be very local, notwithstanding the huge demand coming from foreign real estate buyers of late. But, those are, sectors that we chose for those very reasons, that they're less correlated. And we also chose 3 thematics, right? Which were more growth thematics. So one area in Japan is the high market share category. And historically, in the first 3 years, we called it high cash flow companies, right? If it had high cash flow year in and year out, over time, right? 20 years, 30-year history, let's go after it, right? Didn't matter what industry it was in. And we, ended up adjusting that to high market share companies. And for the simple reason that, most high market share companies are also high cash flow companies. And not all high cash flow companies have high market share, but high market share companies are much more resilient in bad times, right? Why? Because you can transfer price, right? And that's the biggest, determinant of success in turbulent times. If you have leverage over your customer base, and market share tends to be one good proxy for that. So we have that category, and that's been one of our most successful and most prolific areas. But that cuts across a lot of industries, right? And so we take our MVP playbook and go through, again, standard practice in improving productivity, improving sales force effectiveness, increasing top line, so on and so forth. We ended up making a lot of money, and it helps that you have high market share. And many high market share companies are, privately held, right? They might be niche businesses. And owners are very, very conservative. That's why they became high market share, right? Companies. But they didn't realize that if they doubled their production capacity, they could double their revenues and earnings, right? But why take the risk, right? They're living comfortably. And if they did that, they would have to issue personal guarantees on all of the new loans. Their children don't want to take over the business anyway. So, why bother, right? And that's where private equity, that's where NSSK comes to play. We underwrite, that type of thing. I'll give you a very specific example. We own a water purification company that makes cartridges that is sold to owners of their faucet, and it only fits into their faucet. They have a 41% market share for all new apartment and household dwellings, right? That's amazing, right? How did they ever get there? And they sell these cartridges on a subscription basis, and they get paid in advance. So every quarter they're sending a new one, but they've already been paid, right? So wonderful working capital dynamics, huge margins, and this company was only generating 320 million in change. I'm going to use 100 yen to the dollar to make the description easier. In revenues, we invested $300 million in new CapEx. We built out, a huge new factory in their market in Kyushu, which is where they're headquartered. And it also created, a dual, a second source in central, in the Tokyo area. It's selling through the wazoo, right? So, we underwrote, the market potential, and we put our money where our mouth is, and invested in growth. And we were able to work with the local banks, a Kyushu bank, okay, who this $800 million LBO, by the way, an $800 million LBO underwritten by a regional bank, providing us with $300 million in CapEx financing to boot, right? With no financial covenants.
I'm sure that made the local papers in Kyushu. We talked about these three themes. So the high cash flow, high market share, demographics is probably on your list. I mean, Japan.
Yeah. So the other one is we call it the longevity economy, right? So, we're all living longer, and we end up being healthier, if you're in the mid 60s, that's like the 40, you're in the 40s, right? 5 years ago. And both in mind, body and spirit, right? And they happen to be the wealthiest demographic, right? The baby boomers. So if you can sell products to them, that's a growth category. And then the last category is digitization. Japan is incredibly behind the world, in terms of the digitalization of almost everything. And so, digitizing really has a step function improvement in productivity and potentially earnings. And so that's a good thing. And now with the advent of AI, and Japan is, after the United States, the second largest investor in AI data center capacity, right? My wife is the CEO of Microsoft Japan. As you know, Nikki, has had the good fortune of being, now 4 years in the running, right? One of the best subsidiaries in the world for Microsoft. And because Japan is just absorbing, AI capacity through the wazoo. Now, whether they're using it and applying it is another thing, right? So that's the count, right? But you need to have the capacity, to start with, and they're doing that. So we think the whole DX, we refer to it as AIX revolution, also is a very important theme, where you take analog or less efficiently run businesses and apply these tools and improve, the financial profile dramatically.
Great. Before we let you go, you had some questions about the LP perspective on things.
Yeah, I did. I thought maybe we could just sort of close on that LP lens. I did want to just briefly comment that story about the water filtration cartridges that's going in my lexicon is like just a great example of private equity at its best. Just really unlocking potential that's latent in a business because of the unique capabilities that PE can bring to bear. But maybe shifting the perspective to LPs a little. I'm sure you've seen a similar transformation on the part of LPs, global LPs, and their understanding of Japan. Maybe you can compare and contrast like the types of things LPs were looking for when you first got started and kind of like where they're at today.
I think, we're really at the beginning of a secular trend for private equity in Japan, as I mentioned earlier. And, we're, one of the largest private equity firms, but we only manage $5 billion in AUM, right? So that really is circa late 80s, 90s. And so, when you're that size, the traditional large LPs, right? The global, let's call it top 20, right? Whether it be, the CPPs in Canada or the Mubadalas in the Gulf, right? GIC or Temasek. It's very hard to look at $1 billion fund, but once you start getting into that 3 billion, 4 billion, 5 billion, 10 billion category, they can not only become a primary LP investor, they can also be a significant direct or co-investor in much larger transactions. So that is where we are today. And that's because, well, our fund size has increased, but also the market has, come to a point where larger and larger deal opportunities are in front of us, right? So, dialing the clock back 20 years, it was rare to see, $1 billion, $2 billion deal in Japan. But today, our pipeline, we have 53 deals in our pipeline, the best pipeline I've seen ever, right? Including my days in the US. And the total equity check that we need if we funded all 53, is not $2.5 billion. It's $25 billion. That's how many opportunities there are, all in our 6 segments, right? Which is incredible. And I'm also embarrassed to say, I should say that, we sourced all of them because we're clever, smart, and innovative. But half of them walked into our door, right? Because they say, you're experts in the field. We know you well. You're a local GP. We need a private equity solution. And half of these companies are public companies that are either dealing with activist problems, inability to increase their share price because of a lack of vision around, value creation strategies, or lack of capital, people, or know-how to improve where they are. And so, you're seeing more and more multi-billion dollar deals. And so to answer your question, these, significantly well-capitalized sovereign and sovereign-like, investors are flocking to Japan. 5 years, 10 years ago, if I wanted to meet a Middle Eastern investor, they said, well, please visit us, right? Today, they're asking for my time, right? It's a great honor, and we don't take it for granted. And we're very appreciative of, these large investors seeking partnership relationships with a small firm like us. And so, it's incumbent on us to continue to prove that we are worthy of their relationship. And demonstrate our ability to deploy their capital effectively. But, the chance is in front of us.
Yeah. And those are all they're actively taking positions or they're taking points of view specifically on a Japan allocation, as opposed to, say, some sort of a Pan-Asia allocation. Yeah.
No, absolutely. I think, I would even go back just even 2 years, which is not a long time ago, right? When you started having, the US-China relations, right? Start freezing. And geopolitics around the world. There was, at one point, there was a group of investors that said, we need to reallocate from China to other parts of Asia, right? But that's not the reason, anytime I meet with anybody, I say the only reason to come to Japan is because you're going to get better returns and better distributions. That's why you should come to Japan. Not because you're diversifying, not because you want to manage currency, not because, anything, right? We're going to give you the best returns in this market because the market is big. The upside potential is huge. Which is suggestive of the fact that there are a lot of operating inefficiencies in our companies. The larger, the greater the opportunity, ironically. Again, all of these factors are structurally driven. So, it's here to stay. And a lot of the smart money has already recognized that, right?
And those are all international LPs. And you're having these emerging domestic LPs. You mentioned the banks, who are, that you work with and are also investing as LPs. Is your business still predominantly offshore LPs?
We're 60%, non-Japan, 40% Japan, in terms of, dollar commitments that we have.
Okay.
And, I think over time it'll probably be it'll stay in that range.
Great. Look, I'm watching our time, Jun. We've covered a lot of ground. I don't know if there's anything else you want to share. You're now in your third, fourth fund. How many funds do you have going? Yeah,
so we just raised our fourth fund, which closed it in March, and we're already, about a quarter invested. And so if we, your old partner in crime, Kaz Tokuyama, He's running around like a mad dog. And so I think if he has his way, it will be fully invested in I'd say a year and a half.
He was always running around like a mad dog, so that hasn't changed. Keep him in my regards. Great. Well, look, fascinating conversation, and congratulations on, all the great success of NSSK. I know you have no regrets in making this transition, and, Japan is very interesting. I mean, besides all of, my interest in private equity and even venture, I'm very exposed to the public markets in Japan, which have been, delivering great returns. So yeah, Japan's certainly not dead yet. That's for sure. Anything else you want to share in closing?
I'd say to all your, wonderful listeners, right? If you don't have exposure to Japan, it's not too late. Make a visit, check out the landscape, and do some homework, and you'll discover, that, as I said, if you want to get good returns and you want to get cash returns, Japan is certainly a good destination for that. And if you're not coming for returns, you certainly could come for the culture, and the civility, of, what Japan has to bring. We welcome, all visitors. So, please, God.
Fabulous. Well, we will send them your way, and, linking in the description below, we'll mention NSSK, and I think there's a lot of good press you guys have been getting, awards you've been winning, and that's all, there for folks to see. June, thanks again for joining. Nino, always a pleasure.